Traders, hello and happy Thursday. I'm Matt, he's JC with Empire Algorithmic Trading, and we are here to give you your daily dose of Vwapvision's Stock Talk.
It's where we use the volume weighted average price, also known as VWAP. And I'm trying to think of something witty that stands for volatility because what a market, man. But all I can say is the VWAP is king, has helped us avoid all of this nonsense. So, like I say, let's just get to it, shall we?
Stock Talk, baby!
All right, Matt, what insane it is. It's Wednesday, right?
Did I say Thursday in the
I
intro?
think you might have said Thursday.
It's Wednesday.
It's Wednesday. I'm so excited because it's Masters week, right? I love
That's
the
right.
Masters. It starts
Yeah.
tomorrow, so it's all, I'm like, ooh, yeah, all right, Masters week. So that's what I was thinking. Did I miss the first round of the Masters? That doesn't seem like me. But man, what a wild day today. I gotta say, we're gonna start things off a little differently. So, you know how we normally start with the S&P 500. I think
Mhm.
I'm going to start with the chart that scared the living crap out of Donald Trump, and it caused him to withdraw. And that is this is the IEF, the 10-year Treasury bond mutual fund, basically. That it's a basket of 7 to 10 year bonds. That's a wicked sell-off today. It was getting crushed hard. Now that looks, it's like, okay, that's a minor sell-off, but let's look at the actual yield. That's a straight vertical shot on the yield. Bonds were just getting crushed. Rates were shooting up. I mean, dramatically shooting up. And then within a matter of hours, Donald Trump was like, "Yeah, I think we get the message." So the stocks were, like I said, they were. I think they were willing to take the pain of the stocks, but once the bond market started saying enough was enough, I think that's when they started rolling back. And he even said
Well,
so. I
it's
think one of the pieces I read that he said he was even looking at the bond market and was getting queasy, right? So I don't
well,
blame the guy. It's when you're lighting this market on fire. The bond market is king, right? I mean, yeah, the bond market rules, and they were voicing their displeasure very clearly, and fortunately, he backed down. So we had
well,
a
like the whole thing is the bonds basically are the confidence in the United States. That is essentially what the bond is. And
yeah.
as you have mentioned before, the United States over the last 70 years has one of the most stable governments in the world. So it has been the most trusted. It has been stable. And we keep going back to stability, instability. Markets hate instability. They love stability. When you're stable, people have trust in you, people believe in you. When all of a
Yep.
sudden you lose that and everybody's like, nah,
Yep.
they're
Yeah.
pulling money from you.
Yeah. Yeah.
So,
And like we talked about yesterday, we've become an exporter of assets, not an exporter of manufactured goods. And there's a trade-off. There is a trade-off. We start exporting more manufactured goods, we're going to start seeing less money come back to the country in the form of assets. I mean, it's just there is trade-offs there. You can't get around that. And so we need the bond market to one hold up because the last thing we need is blowing up interest rates. But we also need a functioning, solid bond market. Otherwise, the whole freaking thing's going to take a shit, and that's not at
yeah,
all what we want. So,
yeah.
pretty scary in that regard. So it was welcome to see him back off of that. Now, obviously, we kept some tariffs in place, but it's just the back and forth. We need some stability here, man. So pick a lane and get with it, and let's just see what happens. So it was a monster day for stocks. A 9.5% gain on the S&P 500, a solid 12% gain on the NASDAQ Composite, 8% gain on the small caps, and a 9% gain on the mid caps. So as you can see on the S&P 500, we found a bottom at a VWAP. The
Yep.
same thing with the NASDAQ Composite, long-term VWAP, we're finding a potential bottom. The small caps, we weren't able to really find a significant bottom there, but we do know they are going to start rallying. Let's see, where is that VWAP anyways? I wonder why it's not on this chart. Let's set it right there. So it is still below that all-time high, previous all-time high VWAP. So and then mid caps did find a low from the did find support from the pandemic low. Let's take a look at the mid caps quick and see where that VWAP is. That might be the same thing.
The
No,
crazy
still
thing
well
about
below
this
that too.
too, for those listening and not seeing this,
Oh yeah,
every single
sorry.
one of these, every single one of these charts as well, has a in the last few days have set new volume highs for the last 250 days as well.
Yeah,
Like
yeah.
the amount of volume is just astounding.
Oh yeah, yeah. It's there's a lot. Yeah, it's kind of wild to watch, really. I mean, it's almost unprecedented in at least since 2008. Which kind of brings me to the point of 2008. The last significant day like this was in 2008. I believe this is the largest day since October of 2008. And unfortunately, when you go back there, let's see, where was that? That's this week right here. So even though the largest gain back then, the market still sold off for several months afterwards. So don't get too excited about this one day massive gain. I did a
Yep.
little research and let's see, let me put my notes here. Oh boy. So there's been, I think, eight occasions in S&P 500 history where it's rallied more or 9.5% or more.
Wow.
Six of those eight came in bear markets. Uh,
Wow.
the average return after a significant gain like this has been minus 1.3%. That's on the 1 week basis. In bear markets, the average return has been negative 2.3% after 1 week after the massive gain like this. So we're not out of the woods. It was a significant run, a massive. I mean, shorts were caught off guard, right? Shorts were in. All of a sudden, the market catches fire. So now they're trying to cover, which I'm
Yep.
sure added to the fuel to the fire. So it's just there's too much. There's too much volatility. It's still kind of insane. We are quickly approaching the all-time high VWAP on the S&P
Wow.
500. So that's nice to see, but of course, 9% in 1 day will do that for you, right? When you're 13% below, and you get three-quarters of that back in 1 day, that'll help you out a little bit. I was looking at some stocks. There were some pretty good looking chart patterns. They have some nice double bottoms, but there are some flaws to it. The middle peak on a lot of them was 20% or more below the previous high. A good technical pattern for a double bottom is 15% or less. And then it also a telltale sign of the double bottom. The idea behind a double bottom is the stock sets a low and it rallies up and then it starts trading back down again. Now everybody's expecting that low to hold. So everybody's got stops who's bought that stock since then. Like this is our low, this is our stop. Institutions know that, right? So they pierce that low. They get everybody shaken out. They all these stops hit, boom, 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 boom. They're nabbing all those shares, and the next thing you know, the stock is just racing higher. The telltale sign of that is higher volume on the second downdraft. And we haven't seen that, which is considering the volume that we've seen overall the last couple of days. It's absolutely shocking that I think I've seen one or two patterns that actually had higher volume on this test of the previous lows than the actual previous low. So that's a cause for concern. We're still below the all-time high VWAP, so we're still not there yet. But it's just today it was just a massive relief.
Yep.
Whether or not it holds is the billion-dollar question. But I was thinking a little bit about this last night. I know we were kind of talking about what's going to lead the market next. How do we position ourselves? And I kind of got a little sidetracked, and I forgot about the model. And it doesn't matter. And I was like, Jacey, come on, calm down. You've already got it. So you've got the model built. Just trust
Yep.
what you've made, right? As long as the earnings are there, and as long as the price is there, the stock will hit our model. It will
Yep.
hit our screen. It will hit our buy signals, and the market will tell us. We don't have to think about anything. We don't have to go, what's going to happen next? The market will point us in the right direction just by following the fundamentals of earnings growth, sales growth, and price action. You combine those three, and it automatically puts you where the leaders are. And so
Yeah.
I'm pretty happy about that. I calmed myself down a little bit. I'm like, what? Just chill out, buddy. Just relax, man. You've already built this thing for this reason. And
Yep.
it works, but it's still kind of fun to look at stocks and say what's going to potentially be next. We're not going to do that. We're running a little late tonight, so I'll put some stuff together for tomorrow. So I just want to keep everything short tonight, but we'll take a look at some charts, see how this plays out. But in the meantime, we're looking for this VWAP. The upper VWAP is at about 56.30 is where the upper VWAP is. So the good news about all this volume is it's really dragging that VWAP down. You can see that thing just whoop, get sucked right down to where the prices are. And that's exactly what we want to see because that'll give us an earlier opportunity to get in
Yeah.
before the stock does a technical breakout of moving into new all-time territory. So it's all in all a pretty exciting session. I still don't like the simple fact that it's all determined on what the president does. It's that's too volatile that we should not be making trading or investing decisions. The market should not be wavering back and forth on what this person decides to do. And so that's a bit unfortunate. But in the meantime, if the market flashes a signal, then we're gonna act. We're gonna be tight on our stops like we always are.
Yep.
And if it turns, we get stopped out and we do it all over again the next time it runs up. So
Yep.
uh, kind of a little different attitude. Like the market is one day at a time, right? And and I'm sitting there going, man, we're just waffling all over the place. Well, Goldman Sachs just the other day they dropped their recession targets. They were like, there's a high probability, 80% probability of a recession. We're forecasting 2.5% decline this year in GDP growth. And then this afternoon they went, no, we're back to 30% or 40% chance of a recession and 1.5% of GDP growth. So that made me feel a little better. I mean, if Goldman Sachs is going, what the hell? It's okay for us to go, what the hell, as well. So, yeah, yeah. What a day, man. What a time to be
What
alive,
a
to say the
day.
least. But
You know,
like I said, we just need to chill out and just not even think about what's going on. Don't even watch the news, and just pay attention to the price and volume and who's making the money and what stocks are being bought, and we'll be fine.
we're gonna be great. I'm 38. I'm starting to get used. 39. I'm starting to get used to living through, once in a lifetime events. So it's getting to
Yeah.
be pretty fun. I'm
Yeah.
excited to notch another one on the belt on this.
Yeah, man. I mean, I thought 2008 was something else. I remember. I mean, I was on the verge of pulling my money. If it wasn't for the FDIC, I would have taken my money out of the bank, right? But knowing that I was insured, the FDIC, I'm like, you know what? That's what the system's for. If I take my money out, I'm making matters even worse. Let's trust the system, right? And so it did, and it worked. The lesson, the pandemic was just freaking bonkers. I mean, that was how do you wow man I don't even want to think about the pandemic and now we have this is
Yeah.
completely freaking bonkers so like you said man I oh and then 2011 2001 September 11th so good Lord what a century we've been in so far and we're only a
It's
quarter
nuts.
way through it but yeah
And
anyhow Maddie
Microsoft is celebrating 50 years. So, I mean, it's a beautiful thing.
what is that still blows my mind and I'm still mad at my dad I mean granted it's been 40 30 years but I do remember in high school this was before Windows 95 was coming out and this is a true story this is a true lesson one of my first lessons I learned in the stock market was I said I want to buy Microsoft Dad I want to invest I had some money coming my way so I want to put this into Microsoft and he said nah the PE is too high it's too expensive and
Yikes.
that's the lesson I learned that PEs do not matter. What matters is power and earnings power and earnings growth. And that multiple stayed high for freaking 50 flipping years, man. So yeah, don't listen to don't bother with the PE. It doesn't matter. Actually, you can set it as a price target because really good stocks tend to improve their multiple by about 150 to 200%. So if it has a multiple of 50, by the time it's done with its run, it probably is going to have a multiple of 175, so 150. So just that's how you can use the PE multiple. Yeah, that's neither here nor there. That's a different
That's
story.
another
I'm
talk.
sorry, man. I can go off. It's kind of, but it's also good to see. I was kind of looking forward for this little chat. So,
Yeah, yeah.
what a day, man. What a day. We'll see
What
how
a
what
day.
tomorrow brings.
Definitely. And hey, for everybody listening, please go ahead, hit that like and subscribe. If you're watching us on YouTube, subscribe to our channel. Make sure to like the video we got here going on. You can find us on all of our social media, Facebook, Instagram, X. We are also on Blue Sky. And then check us out on our website, vwapvision.com. That's VWAP If you want a little more information on what we're talking about, the algorithm that we created, the system that we use and we follow with our investing and how we do all of that in order to take away all of these gut reactions and feelings and hunches and basically the stuff that we keep getting burned with. To take it out, check out our website and you can get a little more information about that. And then access to our algorithmic daily buy and sell signals can be accessed at Patreon, patreon.com/ Empire Algorithmic Trading. And you also get access to a really cool community and some educational videos as well. If you're wondering, how do you guys do this? What do you look for when you're looking at these signals? And if you just want that information, that's all available on our Patreon. So that being said, we want to say thank you very much for listening, watching, liking, subscribing, following, and as always, happy trading.
Happy trading, everybody. All right, man. We'll talk to you during Arrow Review. See you soon.
Arrows.